Yes. Okay.
Hello everyone, good afternoon.
Francesco Bianchi,
you might
who
know me
is
as
going
the
today
founder
to
of this
update
event,
us on
one
the
of the
situation
co-founder.
of institutional
But
adoption
for
of
now, we
DeFi,
actually,
and in general,
I will
how
start
all
to
the big
moderate this
companies and
panel
especially
to
institutions
understand the frame that we won't
DeFi
touch.
world.
So my
very
role
vast
today in this
experience in the
panel will be
sector,
a little
and
bit
he is
different from the other
representing KBK,
talks
which is
that
a
I've
leading
done
treasury
in last
firm.
days.
And
Actually, like my
so,
role will be as a
Francesco,
moderator
the stage is going to be yours.
For this panel to touch topics
very
as
to hear
decentralization and in special the vertical about digital sovereignty in Europe. So to have a kind of open framing,
Thanks.
Europe runs on infrastructure that actually is not from European companies, right?
Me, Francesco, as part of Spaghettif, we started, we supported from day one Napolif, then now is evolving to City-Real shift, encompassing multiple digital aspects other than blockchain. So today we are basically going to deep dive into how the on-chain finance, or if you want to call it DeFi, is evolving to
we can see that US is still
adjust to the evolving market conditions, aka to also incorporate AI into its own
is how actually we can understand digital sovereignty, what we are missing in this race. In this panel, I'm going to introduce you the organizer and the founders of this institute.
First, I'm Francesco. I'm active in the space since 2020, so kind of an OG. First of all, I started my own DeFi journey into yield optimization. We are going also to touch base on this pretty soon. Then I moved to credit markets. There are kind of new things on chain, and then actually moving to a non-chain asset manager, basically handling in a decentralized way your yield generation for everyone who wants to deep dive into blockchain.
Thank you to be here.
So really the main point about this presentation is that
yesterday actually we had a similar topic in Italian
is that DeFi is kind of mimicking the TradFi world.
That are following this one to see the difference between people that actually are more focused on the European level than like on a national level.
What does it mean?
Okay, so let's start with Salvatore.
The same evolving, a growing pattern than traditional finance, but at a 1000x speed.
So we see actually also from 1st July that Mika will be fully live, right? So 12 EU banks just announced a Euro stablecoin for the second semester of 2026. So Salvatore, if we see that 99.6% of the stablecoin market is actual dollar denominated,
2000 before Christ, up to almost today, we can see
is a regulation helping Europe
development
with sovereign money layer,
finance,
or is actually
from
so demanding that ends the
to then credit and banking, derivatives, capital markets until today.
Mika is actually helping
and the DeFi is basically following the same pattern, although in a very super fast way, and this is probably one of the issues of our own business. So we start, basically today I want to give you, and I'm glad that you are here, a quick overview of the history of DeFi and how is basically facing the latest issues, adjustment that the traditional finance is pushing on the blockchain stuff. So we start from 2009 with Bitcoin, and you see that in parallel it can be kind of parallel to almost 2000 to 500 before Christ period, where basically a new coin developed. In this case, we have Bitcoin. Bitcoin is de facto store of value on chain. It's kind of the new gold, the digital gold. And then later on in 2013, well, okay, we know that Satoshi Nakamoto is behind all of it. And then in 2013, Vitalik, among plenty of other nerds in Berlin, also thought about Ethereum. What is the biggest difference with respect to Bitcoin is that Ethereum works on a chain that is programmable. And this means that we can program and create automated mechanism that if this, then that, creates automation with the financial world. And this is the real deal about smart contracts introduced by Ethereum. Why so? Because the traditional finance has already its own rails, but can find enhancement, improvement, more efficiency throughout automatic smart contracts behavior, discussion, and so on. So, in 2013, there was the first white paper from what we can now call Ethereum Foundation, and then in in 2015, the Ethereum chain was deployed, and now is basically working as we know. So, as I was telling you already, the idea is that we have smart contracts, and smart contracts can create automation out of human and manual intervention to basically deal with multiple actions altogether. So, if you can think about Bitcoin as an high street, we can think about Ethereum with an high street with plenty of stops to basically stop by and create alternative and additional experiences. And we're basically going to follow on the Ethereum chain because we know that Bitcoin is still a bit lacking on additional use case. But instead, Ethereum chain created a lot of use case on top of its P2P distribution of tokens. First of all, we have the 2019 area that can be in parallel aligned with banking and credit.
Funny mode, like,
what does it mean is that we created basically, we entered the P2P distribution lending. What does it mean? That if I need to send some money to this lady in the front row, I can do so through the blockchain. The point is that it was working only on a P2P approach. The first synthesis were MakerDAO. That is no more a case now because it basically changed to Sky. And then we have also EtherDelta that is now the super famous.
Like we see that the blockchain in digital asset
in both cases, the idea was really rooted in DeFi ethos, so basically completely decentralization of the token and no intermediation at all of the distribution between players.
I'm also following different projects with them.
I don't know if you saw that last night Claude was basically blocked by the American government because it was saying that we were distributing AI technology to foreigners. Well,
for example,
this
Revolut,
2017 approach to blockchain token distribution was exactly at the opposite of this approach.
I think
basically mean that
the industry in general is
everyone
kind of moving
who
more
can
to the
have
institutional side,
proper
where banks
use and fair use of blockchain can distribute tokens among
a big
peers.
rule. So, like, what do you think that
this
how can
was
be
at the first step, then later on in 2018, so one year after, we understood that the P2P approach was a bit limited, so there was the need to instead pooling funds. So all users deposit funds in a pooled pools, and then depending on the smart contract rules, these funds were routed to different needs and different players. The clear example is Uniswap, is de facto most probably the most used DeFi protocols nowadays. According to the stats, it has been forked around 300 times from the first time of deployment. So, okay, it's something that is really kind of rooted in the DeFi rules. The concept here, instead of having as I was saying before, so P2P approaches, so banking and kind of credit, so clientele approach. If I know you, I can give you funding. Instead, in this case, it was a kind of capital market. So everyone who wants to enter that pool and accept the entering price can basically deal with it. Nowadays, we know that UniV3 has, Uniswap has developed multiple new instances, Unipass V2, Unipass V3, with different nuances. I mean, within KBK, where I'm working, we are kind of still judging which one is the best one. Uniswap V2 seems to be the best one from our own perspective, but from a disintermediated perspective, instead, UniV3 seems to be the perfect one to let users basically interact with one another. Later on, we have the derivatives period. That probably is something that we are going to take a lot of time during this short presentation. What does it mean? Instead that we move up from simple if transfer, USDT transfer, from me to another person. We basically started wrapping these altcoins, so ETH or WRAP-DC, to basically do some more sophisticated activities. In this particular case, we have two examples. One that is really ordered, Synthetics, that was instead creating a stable coin that was not only pegged to the USD value of the underlying token, but also to the activities on top of it. And then we have Securitize. We at KBK, we are working a lot with Securitize. Securitize, what is doing? Basically, is bringing on-chain the same ownership of a traditional finance equity. We are not there yet. Most probably, we will need to wait for the Clarity Act to have the full 101 presence, but we are moving there. What does it mean is that if I own a securitized LP token, I have the same equity distribution of a traditional finance player. And I don't have yet all the ownership rights of traditional finance players, but this most probably will come at a later
That's the case, for example, of Morpho in France.
So the derivatives period was a key one.
But also like
we can see from, let's say, the parallelism from the initial period, you see. So we are basically in 19th century to tell you how fast is evolving the DeFi ecosystem. And basically, what does it mean? Instead of just transferring token that has either a 101 pegged value or a variable value to BTC to ETH, we are instead distributing tokens that have a value that is related to traditional markets. What does it mean? Yesterday, there was the new Elon Musk SpaceX ICOs that was also distributed on chain, although there were plenty of blames against it because the on-chain distribution was a bit capped with respect to the traditional market. But players on chain basically had the opportunity to deal with a traditional finance ICO in the same way as the traditional players, although not being super sophisticated certified players.
To limit your responsibility.
And then we move to basically the last phase, the one of Eurodollars and retails. We know, unfortunately, that the DeFi ecospace is strongly US-based, but now we are seeing more and more other tokens, other fiat tokens evolving. What this means is that for the time being, if I want to offer you a US-based yield on-chain, I have multiple opportunities. But if I want instead to offer you a Euro-based one, well, it is a bit harder. It is a bit harder to do so completely off-chain. On-chain. I need probably to deal with centralized exchanges to hedge my FX rate or other opportunities.
So, Hi everyone, my name is Arno. I used to run the
in this last phase, the euro-dollarization and the retail approach, we have new opportunities. So, in 2021, we have Ondo that basically started bringing on-chain money market funds. What does it mean? The money market funds are traditional funds. The point is that being almost as liquid as money, they are basically letting us respect the block-by-block exit requirements that the DeFi guys were having.
Who can we hold liable?
What does it mean?
Who do we call?
It means that if I'm deploying my funds on Aave,
so that is also a
I know that
we have to
basically,
just as an answer to this.
I can exit almost the block.
Actually, that's the main issue, right? That there is no customer service around blockchain. So
this is not something that is basically happening with traditional finance.
Protocols are leaving
Instead,
Europe.
we know that there are
really
some
point,
delays.
Because
well,
there's all the governance that corporations and legislations are actually requiring,
finance,
but that's also a block.
centrifuge.
It's a really a
basically understood that if they want to really
so fast, but regulation
enter the DeFi game, they need also to abide to the rules of DeFi. And the rules of DeFi are that
but me as a user, as an European citizen,
not trust but verified. But on the other hand, also we need to be able to exit whenever we want,
you're not protected,
and not wait until the middleman decide that we can exit.
And thank you.
And
thank you for
on
your,
the market, basically did so at first in 2021 by bringing on-chain money market fund with either T0 or
EDI's
T1
line in UTEX or Indy Pack
later on,
was actually like one of the main.
It's also important to mention Itina.
Actually, like I saw a nice article that open source
basically
is
by
the right
bringing
first step,
on-chain
right?
the carry
And
trade,
then decentralization
the basis
should be
trade,
the next one.
basically
What do you
creating an
think about this
arbitrage
topic?
and a
Like,
yield
why isn't
out of
open
spot
source
and
enough on
future
its own?
rates.
What are the problem
In
of
this
like
respect,
open
most
source
probably
technology?
to if.
I also saw
Although
Francesco,
now it's also true that the basis trade is kind of lagging behind.
What is the main issue
we have
of
multiple,
open source
instead they are
technology? Why it's not
integrating
enough?
multiple
What is your
treasury
take,
bills
generally
to
speaking,
basically support
on
the
open
yield.
source
But
technology?
nonetheless, it was
Well, I think
anyway
first of all, many
sort
of
of
the
innovation.
large,
Why so? Because they let us,
suppliers out there, Google,
they let
Microsoft,
us
etc., they
users
already run
enjoy
80-90% of their
a
stack
carry trade
on open
solution
source.
fully automated
Open source in itself is
on-chain
not a guarantee
without
that
the
you're
need to
digitally
be
sovereign. So they put a sauce over
KYC'd,
it that is
fully
and that,
fully
has
onboarded
rent
and this kind of stuff,
extraction
but basically
as a business model.
gain about
So,
volatility in the market.
It's nice. That
And last but not least, we have
European Commission now
Pendle
says,
that
well,
was instead
let's go for open source and then we will be digitally sovereign.
that
That's
basically
not the case.
introduced the kind of
We need
treasury
something
split.
more.
We know that the
And actually,
DeFi
my
yield
biggest worry is
works a
not
lot
even the
on
open
top
source
of
part.
incentives.
A lot
And
of governments are now saying,
on
oh,
one
we're going
hand,
to switch
I'm a
off
bit against
Microsoft
it
and now we're going to
because
use,
the DeFi game
German
basically
cloud provider or what have you.
kind of
And then we are digitally
inflated
sovereign.
the incentive
What we are
games.
saying is you're just
Okay,
trading
we are
one
new,
central
so
player
basically
for another
we
central
had
player.
to
So yeah, it might not be
incentivize up
American,
to
but it's
25%
German.
new players.
Fine. So
But on
it
the
falls
other
within
side,
the
it's
EU
part of the
jurisdiction.
game, so
But still,
everyone is
you are,
incentivizing.
in
We
a-
all
as
see
we say, in a different
new
prison,
banks
with a
basically
German flag on it
welcoming
rather
you
than a
to
US
open
flag
a
on
new
it. So the
account
problem
by just
is not
saying,
the fact
guys, you can
that,
have one, two
about jurisdiction
extra
of where
incentives on top
supplier
of
sits,
your
but the fact that we don't have
banking
control
account.
over
So
our
makes
own
sense. But on the other side, I'm also
And
glad to see
so
that
whether that is
nowadays,
American, whether that is
unfortunately, I'm
German,
missing
whether
a
that is
slide
Italian,
for
we need
it.
control of our
Nowadays,
infrastructure. The only
we're
way to really
having,
do that is by
I say,
decentralizing.
less and less interest on incentives. Why so? Because people understood that
actually, that's
one
really
thing
a
is
nice
to
touch
have
point
a
because
base yield
being open source is
based
really a
on
bias. You know, when
either
you see
USD or
something
euro
is open source,
interest
they
generation.
instantly think that's actually
Another
something
thing
good and might be really
instead,
close to the
basically
concept of
betting
decentralization,
on
right? But
the
thank you for
governance
this
token
clarification.
of
Maybe for people
Ondo,
that don't know,
Etina,
being
Pendle
open source
to
doesn't
basically
mean being
be
decentralized,
priced up
right? That's
until the
completely
moment
different.
I can
Yes.
sell it. And then
thank you. By the way,
I
just
think
to
that
add on this point,
I'm done. Yes, with slides, but we can continue the discussion. So,
is open source, right?
what is happening nowadays? Nowadays, we are basically moving away by the
AI
poor concept
war,
of
as we
DeFi.
say, is the
So, the decentralization concept is a bit
to go over this war is open source. So
I would say
for sure is open source is not
put aside
enough,
from the incumbent players. Why so? Because the incumbent players are traditional players. Traditional players that basically are rooted into capitalism, and what they say, they see that blockchain.
And and this is, in my opinion,
blockchain basically let them use another rails that are way more efficient and way more automated with respect to traditional banking rails. And this is one probably of the key aspect of,
is the only
the
confederation
key is about blockchain, that blockchain is here to stay. It's here to stay because the banks, the investment banks, the hedge funds see a real deal in dealing with it, because they see kind of better margins and better results. The point is that we shouldn't really lose all of our ethos at first in creating decentralized solutions. Again, going back to the AI example that I was creating, that is probably really fitting the theme of the Ctrl Shift conference, that we have a new digital world where
components of
blockchain commingle with AI automation.
Of course, there are other cases that
the US government was able all of a sudden to stop the approach to the new fable from Claude, while the idea of blockchain is that you have full ownership of your token and no one can basically block you from using it, spending it online.
I would like to add that because I'm from in this industry from actually like
we're losing a bit of ethos about
I'm kind of like a believer in
but
decentralization.
it's part
of course, like I have a blockchain studio, dev studio. We do so many stuff
this was the
blockchain.
cons.
But if I have to be honest, like I don't like anymore the word decentralization. I like really more like the distribution.
Traditional players,
of like
in particular,
being decentralized.
Dealing with Ondo or Securitize,
recently really a buzzword.
Are basically
because okay, let's be decentralized, and then you see that the nodes of Ethereum are on AWS.
Seeing the blockchain as
then,
an
like, you see
additional
the DAOs, let's say, okay,
where they
Aave
can
is
find
a decentralized protocol.
And
then, like, the owner of the protocol of Aave are actually like a few people.
We just started
they can
some
dump Aave
new
to
markets, some new vaults with
votes.
Securitize.
And that happened
These
recently.
vaults are particularly
so
interesting
decentralization
because
is
they are kind
amazing
of
by
solution.
concept, by design, as you said.
Is that
but in my opinion,
in this
the
hybrid
adoption
solution we have on one side the full
is not really coming because the design
anyone
of our
with
smart
a wallet
contracts and
can
decentralization,
deposit
because
his
in the end of the
USDC
day,
and
what
earn
is in a
yield,
tangible manner
no matter the
decentralization?
background,
If you see
the KYC
in terms of a governance, is a
or
DAO.
whatever. On the other side, instead, we have borrowers that instead are fully compliant, fully KYC'd,
maybe we can think about
only
automation.
them can deal
like
with
if
the
you see a tangible
and I see that,
implementation of decentralization, what could be automation?
On one side, I would say that I would love to see only permissionless
I would say that a trade-off between like a fully centralized and a fully decentralized solution is actually like the way to go.
Plenty of money spent on compliance that don't want to ruin everything. And so basically they are kind of happy with this hybrid approach where on one side you can have fully DeFi ethos, but on the other side instead you have
so even with me, with my car, like you cannot have a fully
decentralized solution. The key point about compliance is that nowadays we don't need no more
distribution side and on automation
what does it
side.
mean?
That's actually what decentralization means.
I don't need to
come back on
upload
the
my ID, my certificate of being an educated investor and so on, but I can just use ZK.
And being honest,
ZK, aka zero knowledge, is the new technology brought up
to adopt those type of infrastructure, in your opinion.
Two sentences.
What are the main issues?
The concept is that blockchain nowadays can let us deal with compliance in a more decentralized way, so through ZK, and can also let us basically deal with token and yield generation on chain without being fully compliant. And my point is that compliance is not a problem. The real problem is ownership of the data that we are sharing with traditional players that sooner or later are being leaked, hacked, and so on. And we don't want so. So basically, ZK proof can be a solution to let us deal in a compliance way with financial market without spreading all around our private data. Thanks. It was chaotic, but thanks to all of you for attending.
Sort of a design principle, as Alessandro said, as a dot on the horizon. This is where we want to go.
Thank you, Francesco.
Every CIO,
you can leave it
CTO
there.
that you talk to right now, they
Do we have any question of DeFi to Francesco, institutional players that are adopting mostly private chains instead of being decentralized as we thought?
With any specific system that you're building.
We will see how things will evolve. Now we have Olga talking. So she was here the entire afternoon as MC presenting our panelists, but now it's my turn to present her to the speech. So let's give a short applause to Olga. Acquiring the future in the strategic role of merging and acquisition in fintech payments industry consolidation. Wow, what a long title.
And that is why we started
just acquiring the future then.
Yeah, definitely.
Just let's acquire something.
Okay, tell us how we can do a merger and acquisition in the blockchain ecosystem, okay? Thank you, Olga.
This could actually be something that Europe thrives in.
Thank you for introduction. It's a sort of transition already to present my annual research here in Naples.
Because
so this time, perhaps just waiting for a second for the slides.
We still have a chance in AI.
And
forget it.
Meanwhile, I will represent what I found in terms of trends of M&A, especially, of course, targeting fintech, and that was very helpful to listen also previously to Francesco, to understand what was in DeFi world, and now I will target more on the digital asset space and of course the convergence with traditional finance as it should be.
On the decentralization level, that's true, but it's also true that Ethereum is out there from 8 years, and I also build smart contracts, also worked with the foundation so many times, and I truly believe in decentralization, right? But my take is more on the enterprise level, because in the end of the day, we see that actual innovation can come from the bottom to top.
Title,
but in the end of the day, you need big corps that actually implement technology to make a thing, right? So why do you think this decentralization by design is not being implemented? What are the blockers, in your opinion, about that? It's more legal
so let me present also briefly
more governance
myself.
issues,
or
even technical issues, because sometimes I'm okay, smart contracts is an amazing technology, right? But as you say,
my fellow peers
there is a problem of support.
So
do you think that is more a technical issue? Or
Oracle
a
is
legal
infrastructure
issue
for cross-border payments.
From the enterprise level.
So basically facilitating all the money movement. And here you already can see my interest in exploring how payments are evolving in the last years. And the second one, I'm the co-founder and co-president of Blockchain Student Association Italy. We're the closest partner of the European Association as well. So we're trying to make this gap between university and the real world of business. And also, I just finished my master in corporate finance in Bocconi, what surged significantly my interest in M&A and all the finance-related world.
That is one thing. The
so
second thing
let's
is
go.
That regulation is
that's
not
very
so much
simple.
a problem. We could turn
I wouldn't,
around.
of course, dive into
regulation
details of the payments, but just to get some background understanding. What was pre-fintech is T+3, T+2 settlement, and plus 3% of the fees when we're traveling all the way from point A to point B. And what happened in the fintech era? We don't have even intermediaries. So it's almost 0% cost, and it's instant settlement. which is facilitated usually just by one intermediary, for instance, taking the funds from point B and transporting them to the end.
Therefore, I also think that in Europe we really have a chance because we are strong in regulation. We can, we can complain
about
the
fact that of course, we went to discover what is actually happening in the world of the fintech, as of course everyone knows that there are major acquisitions happening, and main companies, I don't know, MasterCard, to name the last ones, is acquiring the smaller fintechs.
Thank you for
this
basically,
what are the real strategic rationales behind those acquisitions?
On this touch point.
We can first deep dive into the old payment stack. As anticipated, the main issue here is that we have all the systems as such as CHAPS as SEPA developed in 1970s. So that's quite many years ago, I would say.
Do you see something, let's say, coming maybe from universities
settlement,
or
which is of course making the
they need
payments
to start to how actually
Second of all, we have the huge cost of
maybe
it,
studying it,
because as
even
World
like maybe
Bank is reporting,
making awareness around what is decentralization. So from like the study level, or maybe from like training courses in corporations, what is decentralization? What is like the real way of, in your opinion, what might be the best way to actually make awareness and what they're trying to do with this issue is actually that, right?
For the businesses,
but let's try to be tangible. Like, how do you see what is the best fund, in your opinion, to spread this information around Europe? Might be universities, might be students, might be more training for corps.
Huge globalization flow when we're not usually living in our own countries.
Needed, but
so
as I said earlier,
is here anyone from
a
Italy?
lot has happened already bottom up, so I think there are a lot of students
only one person, so we're all internationals. Of course, that's the conference.
Very enthusiastically,
but still, that's a lot of traveling happening.
Start to work in the area,
so I said, about G20 targets, and another huge main point is the pre-funding. So how international payments are working. We have different banks involved, and to make the payment and to pay in one country in the second, usually companies before tended to pre-fund their accounts in the country B, so to facilitate this payment. And that's a huge cost, as you see, business reporting again, 2 to 5% of transaction, which is resulting as lost capital in a sense. So what happened? Here I outlined 5 layers, which in my opinion are the ones where the fintech actually changed something. And also the 5 names from the companies, and let me begin then to explain one by one. Layer 1, which is the acceptance, that's the foundation for all the payments, for all the money movement. And here we have again this famous 1970s, like last century developed systems, which were inefficient. It was like a batch transaction, settling 1-2 days later, encountering the cost.
Now we are going to go decentralized.
Here we have Stripe, which revolutionized everything. Basically, the proposition was very simple. Before you needed to have a big tech team to integrate everything, to onboard all your merchants, and so on.
I think that one of the main issues, blockchain is transparent
all over this
transparent by default. But sometimes, for a large corporations, this transparency is an issue.
Stripe just provided us with very simple integration methodology.
All the data on the blockchain daily, right?
Which you can integrate.
So I think the key here is their knowledge proof.
Later we go to the second layer with the company Nexi, which is a famous European company,
I think that one of the
already using
main
M&A to
that
merge, because it was integrating different smaller businesses
we should make more awareness around
network to transport the payments all across
decentralization is amazing by concept,
and the most importantly,
but by implementation, I think that ZK smart contracts are the perfect mix, because you have decentralized solutions, but you can keep confidential compute to cover certain data, and you can unlock those data just when actually
Third layer is custody.
Always like the example
I would say custody just to be a bit more digital industry with the health industry. But here I would also refer to the traditional banking,
right?
because
and then I
circle,
go
which
to
is
Nigeria
and
I have surgery to make. They don't know that I'm allergic to paracetamol, and they give me paracetamol because there is not really communication of health records, right? And one of the first projects I was working in the university was like, let's create a blockchain layer to share health data, right? But that was not possible because our private data, so you are not respecting compliance rules and so on. While with ZK, you can unlock this potential. Like you can have certain entities, let's say maybe hospital, that can have access to this data, while all the other public and other people on blockchain, they cannot see.
The initial idea of their founder was to optimize the facts, because that's not okay that banks have one rate and they have two different pointers and customers when we're doing the conversions between different currencies. So here we encounter stablecoin rails as instance, which helps us optimize and leverage on the liquidity. So basically we are not referring to the banks themselves anymore, but we are going to the intermediaries as Hercle in that case, which can help us deliver the liquidity instantly and make it at almost zero cost because we are relying on the DeFi stack here.
Yes.
And the last is the infrastructural rails. And here I mentioned Tron because Tron compared to the classical SEPA or the classical SWIFT.
Well, privacy, of course, is one.
We'll show you this difference between T+2 settlement and single-digit cost and almost 0% and 1 to 5, I don't know, depends of course on the network, but in case of Tron, instant settlement. And also to reflect, Tron processed $8 trillion of volume in the last 12 months in 2025. So that's a big number.
ZK and privacy
now that we broke down all these layers, so the 5 that I mentioned, we're moving
is something that really
to
can change the game.
Narrative. Everyone saw this, like Reuters, CNBC, the blog. Acquisitions.
We also work on the institute.
And the numbers are astonishing, isn't it? Like $1.8 billion paid for the company. That's crazy. Of course, we have the smaller ones, but that's a huge number. Here provided also the statistics on M&A.
Sometimes
M&A began roughly in 2020 as like the major trend. Here I focused on the last years because the trend was going up. Later we had the famous FTX crisis. So in 2022, it was a bit on the posts, I can say. And again in 2023, we began to observe the trend, which you see is of course going a bit down and up. But majorly in 2025, we're seeing these amazing numbers which were never faced by the industry. So we can ask ourselves what's actually happening, why we spend so much in mergers and acquisitions, and why we do
very
not
few adoption in Europe at least
internally, or because develop, but we prefer to acquire the companies.
The decision makers,
and here, as I said, that's the first wave. Wave 1. In my opinion, we can distinguish the M&A between two periods.
Or maybe they are scared
the first one, which is I'm representing here, is the scale consolidation. So here the companies are mainly focusing on the cost synergies across 2 to 5 years.
For sure, ZK
or 3 to 5 years, we are facing 20 to 30% cost reduction,
just and
because
also
driven that we can reduce some functions and converge them into the one single entity. So multiples, as you see here, are roughly
many
15,
others.
20
digital identity, of course,
over EBITDA.
But again,
that's
what we need to do now, what we need to understand, and I see many people from institutions in this room, which is great, we should definitely go there one by one, talk with the people at the right position, both from the political sphere and the enterprise sphere, and explain why this could really help.
We are now, we have second wave of capabilities acquisition. Capabilities acquisition is not anymore about scale. It's not anymore me acquiring the company just because we can become huger and we cut the cost.
We are with ZK, but
if we will look also at examples of these companies,
for ZK, for other technologies
I listed
right there,
the major ones,
we really need to make the case, we really need to engage
but we have
with
also
the right
the companies
people,
at early
with the right
stages.
institutions. Now, and this is something that is already happening because, again, blockchain technology has been around for 15
what
years
are the premium
or more.
drivers here?
So we're already in a transition phase phase from pilots to really production system when it comes to digital public infrastructure.
Or other
it's the moment, and that's why we are here, by the way.
So here, famous example, MasterCard and BVNK.
No, yeah, actually, like,
Series
I'm
B raised in 2024 December, 140% valuation difference 1 year after, when we're acquiring at 1.8
sometimes I think that
billion.
the problem about complex technology
and here listed also three
it's also
main
about
drivers
narrative
here,
and understanding
premiums of this valuation.
Because of course,
Control
like,
premium,
as we are nerds,
because
we work on it.
Around, so there are
Personally,
many
I code on that, but
included, and we
like
need
for
to
people that
undertake
are
them all
outside of this
and
industry,
strategic
it's something
synergy,
really abstract,
because
you know?
MasterCard
And,
wanted
I
this
think
access
that
to
universities or
rails
like in
and all the
general
infrastructure
educational systems
that
should
BVNK had
should
developed
work a
by
lot
the
on
time.
that.
That was a
And
huge
I
one.
like a lot your type
And
of
the third one
initiative
is
because I
urgency
think that
premium. We have Visa,
you should try to
MasterCard and
make
Visa
those complex
basically between them.
topics
So either MasterCard
easier
acts
to
now,
understand,
either
but not
it
in a
won't have
general
any
way.
opportunity
Like easier
later
for
on.
governors, easier for policymakers. Kind
Here
of like to
listed
take the
4
same
strategic
topic
drivers of
and
payments,
break it in small
and
pieces
that
and
you will
adapt it
basically
for the
see in
targets
every
that you are talking,
M&A
right? So let's say,
First
for
of all,
example, we can try to
mentioned
make
is
a report
technological
after this
capability.
panel, right?
We are saving 2 to 3
touch
years
topics that
of
we
internal
discussed,
developments
and
by
we
just
can like
acquiring
have
the
a
company.
specific templates
So I
or
have this
specific
great stack
narrative
and
for
I
policymakers,
integrated.
specific narrative for
The
builders.
second is a
Because for
regulatory.
people that are outside this
Licensing
industry, it's really
is
hard to
everything.
understand.
Everywhere
And
you
if
will
it was
go
hard to
also in this
understand
conference,
blockchain,
you will hear
the
everyone
knowledge proof
talking
is
about
even like,
licensing.
you know,
Especially
complex
especially
system,
you.
way
It's a
more
huge
complex
problem,
system.
and
So,
not every company
like,
can wait
in my opinion, is a
until they
narrative
get the
problem,
proper
I would
license.
say.
So they
And
prefer to cut
that's
this
what
way
like I would like
and
actually to
just go
continue with you,
directly.
Alessandro, on
Client
the problem
base,
of narrative,
which is
because
still major
I think
thing
that in
when
general,
the
like
company wants to
institutions,
expand,
big
and here I
corps,
can make an
policymakers,
example of Coinbase and Deribit.
regulators
So when
in general
Coinbase wanted to
they
expand
still
on
have the bias of
offering,
crypto
they
speculation.
acquired the biggest
you know?
exchange,
And this
which
industry
had
had
the
this
biggest
bad
client base
narrative from a
to
while.
put it
Now,
all
thanks to
under their
MiCARs,
umbrella.
thanks to institutions,
And the
adoption,
last one
I
is,
think
of course, the
that's
last
maybe
but not
like, you know,
least,
from
I
last
can say
year
like
that is quite changing.
is the company
You know,
and
this
all the talent
industry is
inside it.
maturing. That's
Because
my
the
feeling.
talent is something that we can bring in
you're working
and
with
start
institutions, you talk
developing
with
and
them
start growing
on a daily basis.
together.
What do you think
So
about
the
this
expertise
narrative?
of
Like,
founders
do you think that
and
the
this
crypto
field
industry,
is something
decentralization
can
industry is
never
like
be
changing,
in
is
traditional
moving from
finance?
this speculation narrative?
Of course, we
or
have
like
risks.
it's still anchored
Risks
to
related to
that
all
side?
this wave. First one, acquisition windows
I just
limited.
want to mention
That's
one
what I
thing
mentioned.
here, and that is
we have a bunch of
never
companies,
waste a good crisis.
but the best ones are already being acquired. And if we want to
maybe
act, we
one
need
of
to
the
act
interesting
now.
things about a crisis that we are in right now
integration model,
is the fact that everybody is talking about digital sovereignty, as I mentioned earlier.
The last acquisitions,
all of a sudden we all understand what sensor
fully,
resistance
but sometimes
means.
they put like aside.
You know, this
so
big
of course,
topic of what if Microsoft switches off your service
they still
because
put
you
a bit
sit
to
in
the
The Hague
side and not fully integrated
with
just because
the
it will
International
first trigger, for
Justice
instance,
Court.
regulatory
all of a sudden
points,
we understand
and the second
what
one,
that
the
means,
team.
sensor
Not all the
resistance
team
technology.
from major fintechs
So
are
let's not
capable
waste
of
that
functioning
crisis
within
also
the
in our narrative.
major
and that's something that I want
companies
to add.
with
Sorry.
all the legacy problems. And execution risks.
Yeah,
So large-scale integrations are increasing, of course, this appetite for future acquisitions.
Of course, so
and that's
different
this
people,
like
different narratives.
circle,
I already
which
mentioned
is
it, but
going
of course, the point
every
from
time
Arno
it's getting
is
bigger and
great
bigger.
as well. I totally agree.
So of course, we sort
I
of
will
move
say
in the
something
direction
maybe
that we
that
need to do
a
something
bit.
now. Here, also
so
a snapshot on regulatory
see
environment.
nice
As I
crowd
mentioned,
here.
that's mainly US and
Can
the main
you raise
of course,
your
the
hands
Clarity Act,
if you have been
Genius Act.
working
So I
on
wouldn't repeat, I'm not a
blockchain
legal,
technologies
but just, I mean, to mention
without
really,
financial
really crucial stuff the companies are looking at. And the famous MICA, especially in Italy.
Okay, 5.
We have many
Five
issues
people,
related, and
or
companies
6 maybe,
are
out
very
of,
actively
I don't know, maybe
looking
50?
for some targets they can
Right,
acquire
so
and get this
when
license
people
ready.
outside of our
And
bubble
of course, all the discussion
think
about
that
the
crypto is
CBDCs
only
is not the last
speculation,
one.
and maybe they're right.
CBDCs can be seen as a substitute, or
Let's-
it can be
let's-
seen
let's- not
as something
speculation, but
additional to the traditional
of
DeFi
course,
system.
big blockchain,
So here the
it
companies are trying
works
to
with
monitor
Bitcoin,
it closely, whether we will
which is an
collaborate
economical
with the government and
use
with
case
all
of
the,
blockchain. But blockchain is
players
way
of
more
this
than
ecosystem,
this. It's
or
coordination
whether
scale
it
and
will
blah,
be
blah,
like
blah,
a different
many other
model of
things.
substitution,
So maybe
as I can say.
if we want to change the narrative in front of policymakers, institutions, other players. Let's try first to look inward first.
Which is essential.
Let's try to educate ourselves on how blockchain can be a real value game changer for society, for economy, for people, for
major
business.
Brands may
and then after
approach your company
let's
in the next
change
months
the view of others.
Ask some potential interesting questions regarding that. I will just leave you with this phrase.
To end the panel,
talking to many practitioners
it's true that blockchain started as a financial infrastructure.
And seeing the already
and I mean, for finance,
numbers from the last
years,
you
can trade 24/7.
I would say the next 24 months are the ones
you can buy stocks 24/7. Real world asset tokenization is a thing, but it's still really connected to the financial infrastructure. Because me as a builder, I love tokenization of bonds, I love tokenization of stocks, but even if you see to start tokenization of real world asset outside the financial field, let's say real estate or art, that doesn't really work yet, in my opinion, right? Digital twin is something that doesn't really have traction, and we can see on the protocols, right? Like the main real world asset tokenization protocols are still stable coins. That's money, right? So I completely agree with you. And actually, I think that one of the main goals of this institute is to make awareness and how you can use blockchain outside the financial field. So I would like to thank you for this panel. It was amazing. Thank you for the crowd, and enjoy the next panel over here. Thank you, everybody.